All right, well, there are more things in a business than just cash. So let's tie this whole thing together. Let's expand it. Let's tie this debit and credit, left side, right side, into the accounting equation, and we're going to do it in this way. And when I say we, too late. Already been invented over 500 years ago, and since we're still using the same thing, it must work pretty well. For assets, we're going to show increases with debits, decreases with credits. Remember, debits are on the left side, credits are on the right side. That's just a convention they adopted over 500 years ago. For liabilities, we're going to do the exact opposite. Increases are going to be shown with credits on the right side, and decreases are going to be shown with debits on the left side. And owner's equity will do the same as liabilities. Increases will be shown with credits, decreases with debits. And I'm going to show you in just a moment. Trust me, if we adopt this policy of doing it like that, we're always going to be sure that our balance sheet equation is true. The accounting equation will be true, and that's going to feel good. Okay, we need a visual image of this whole thing, and here it is. Remember, debits, left side for assets. Debits are going to represent increases in assets. Credits, numbers written on the right side of the page, are going to represent decreases. For liabilities, exactly the opposite. Credits on the right side will represent increases. Debits on the left side, decreases. And we're going to do equity the same as we do liabilities. Credits will represent increases. Debits will represent decreases. Now, here's what I need you to do. I'm going to take my glasses off so I can do it. Okay, I'm going to prop my eyes open and I'm going to stare at the screen now. I'm going to burn this image into my brain, because if I can remember this right here, and maybe it won't reach my brain, but at least reach my retinas. I've got it burnt in, because if you can remember this screen right here, lots of problems are going to be solved. It's not that hard, but it's very important. So stare at this. Get this down. And if we remember to always make sure our debits equal our credits, then that will ensure that our assets equal our liabilities plus equity. And we know that this has to be true because it just has to be. That's the way business is. If you got assets, you had to get the money to buy those assets. Well, we can drill down just a little bit and say, okay, that's a very important concept, but if we just keep track of this simple stuff here, debits equal credits, if you properly apply the debit and credit rules, then the accounting equation will always be true. It's a simple thing. Debits have to equal credits, but if you do that and you apply it correctly, everything's always going to be perfect, even when you got a complex transaction. So let's just see how this works with transactions and debits and credits. So owners are going to invest some money in a business. From the standpoint of the business, cash goes up. How do we show that? With an asset, cash, it's going to go up. With a debit, and what else is happening here? Well, the owners invested, so our equity is going to go up, and we show increases in equity with credits. Well, look at this. Our debit and our credit are going to be exactly equal to each other, and we've done it correctly. That means our balance sheet equation is also, our accounting equation is also still going to be true. And we can see that right here. Let's try another one. We borrowed money from a bank. Our asset cash went up. We show that on the left side with a debit. And what else happened? Well, our liability, the loan went up. We show increases in liabilities with credits, and we see one more time here, debits are going to equal credits. And that also ensures that our assets equal our liabilities plus equity. The accounting equation still works. We're going to buy some inventory on credit. Inventory is an asset, and it goes up with a debit. What else happened? Well, the liability, accounts payable, also went up. We show that with a credit. Debits equal credits. This is beautiful. People said that this is going to be hard. It's not hard at all. This is easy. Let's try one more. Equipment goes up. That's with a debit. Cash goes down. That's with a credit because it's an asset. So one asset gets debited because it's going up, equipment, and the other asset, cash, is credited because it's going down. The debits still equal the credits. Look at that. Debits equal credits. That after every transaction, that ensures that the accounting equation is always going to be equal. Just keep track of debits equal credits. Now we're going to have a flashback for just a second here. Flashback. Okay, glasses come off again. Let's get this in. Assets up with debits, down with credits. Liabilities up with credits, down with debits. Equities up with credits, down with debits. Got it. It's burned into my brain here. Make sure you've got it too. Make sure that you've got it.